Good morning, traders. My name is Adrian from BCR, and I'll be bringing you the latest insights and key levels from the markets. The instruments we'll be looking at today are the dollar index, spot gold, and crude oil. Let's dive right in. First up, we've got the dollar index. The US dollar index suffered its worst weekly drop, that's negative 3.58%, since November 2022, falling to a 4 month low of 103.56. Weak NFP data and dovish signals from the Federal Reserve accelerated selling pressure, with traders anticipating multiple rate cuts. The index is struggling below 104, signaling continued weakness and concerns over US economic growth. Safe haven flows have shifted towards the yen and Swiss franc, while tariff related uncertainty adds to market volatility. From a technical perspective, the 5-day and 200-day simple moving averages have formed a bearish death cross, reinforcing downside risks. The RSI and MACD indicators remain bearish, suggesting further declines. Key support levels are at 103.34 and 103.38, with 103 as the next psychological barrier. A failure to hold these levels could extend losses to 102.52, but on the upside, resistance lies at 105 and 105.03, with further hurdles at 105.7 and 106. The market currently sees the US economy losing its exceptionalistic advantage, weakening the dollar's appeal in an environment of uncertainty. So now we've got gold coming up. Gold prices ended last week with a 2% gain despite some consolidation between 28.80 and 29.30. Uncertainty surrounding US trade policies, particularly tariffs imposed by President Trump, have intensified market risk aversion, supporting gold as a safe haven asset. While Mexico secured a 1 month tariff delay, retaliatory measures from Canada and China have added to global economic uncertainty. The February non farm payrolls reports showed job growth, but below expectations, leaving investors cautious about future Federal Reserve moves. From a technical perspective, gold remains resilient around the 2900 level, with the 14-day RSI at 57.5, signaling continued bullish momentum. Key downside support levels include 2900 and 2877. That's the 30-day simple moving average, and 2862, with a deeper pullback targeting 2856. On the upside, immediate resistance stands at 2930, followed by February's all-time high at 2956.30. A breakout above this could trigger renewed bullish momentum, paving the way for a potential move towards a 3000 psychological mark. Bearish traders remain cautious as a risk sentiment continues to favor gold's strength in an uncertain economic landscape. And lastly, to wrap it up, we've got WTI crude oil. Oil remains defensive near a 3-year low at $65 as traders react to tariff uncertainties and OPEC decisions to increase production. US President Trump's temporary exemption for Canadian and Mexican goods under USMCA has failed to stabilize prices, with ongoing trade policy uncertainty weighing in on the market. Additionally, the latest EIA reports revealed an unexpected rise in US crude inventories, up 3.6 million compared to the expected negative 290K, adding further downside pressure. OPEC's first production increase since 2022 has also contributed to bearish sentiment, with supply side risks exacerbating concerns over weakening demand. And on the technical side, crude oil has breached the key $70 level, forming a bearish death cross, just like the Dixie, as the 5-week moving average, 69.67, that fell below the 20-week. Support levels remain at $65 and $64.75 and $64.31, with further risks extending to $62.34. But on the upside, though, resistance is seen at 67.5 and 69.55, with a potential breakout above $70 signaling a stronger rebound. However, with unfavorable supply-demand dynamics and recovery momentum remains fragile. That's all, traders. That rounds up today's market analysis. Thanks for tuning in. Don't forget to like, comment, share, and subscribe. Also, if you have any further questions, then don't hesitate to leave a comment below and I'd be happy to answer. I'm Adrian from BCR, and as always, good luck with your trades.